Ladies and gentlemen, you guessed it right, I am back with yet another disgustingly powerful trading strategy. This time the strategy takes place on the 15-minute time frame, and then we are scaling down to the 1-minute time frame in order to find our entries. Make sure that you watch the whole video, because I guarantee you that there is not a single video similar to this one where I'm explaining a very specific thing. So go ahead and watch the full video, and in the end, in the final slide, I'm gonna be presenting my statistics for the signals group as well. Let's begin with the video. And here we are, guys. Now, as you can see right here, I have identified a fair value gap on the 15-minute time frame. This is just a first, let's say, overview of what we're gonna be trading, and those of you who are able to already identify what is gonna be different in this video compared to other strategies, then very good for you. For those of you who didn't, of course, we continue with the rules and with our exact entries. Okay, so let's move a little bit forward. I am on the 15-minute time frame right here, and I'm zoomed out, as you can see. And as always, we have to identify some form of break of structure. What is a break of structure? As an example, let's take this one. This would be a break of structure. Any high and any low that are being broken are breaks of structures. Okay, this is a break of structure right here. Now, contrary, I say here, to the common strategies where we're going ahead and we're identifying the whole, let's say, trend, the overall trend, in this strategy, we're not gonna be doing that. So instead of going ahead in the past and saying that here we are moving in an uptrend, so we are only wanting to buy, this is gonna be treated differently. Okay, we are not gonna say here again that price is making higher highs and higher lows, so let's go ahead and check out for the next leg to buy. We are gonna be doing something different, even though this is not a mistake. So if you would be looking for a continuation, assuming, for example, you would be going ahead and you would identify a fair value gap of the 15-minute time frame, and you would be looking for a continuation, this is not mistaken. Nonetheless, we're gonna be doing something different this time. What is gonna be this different thing? We are gonna be going ahead and identifying the most recent leg that is being broken. So I say, instead of looking for buys, we just identify the most recent leg. What is the most recent leg? Some of you might say the most recent leg is this one, Chris, down here after this break of structure. Of course, you cannot trade anything in here. The most recent leg is this leg over here. Okay. This is the most recent leg. I go ahead here and highlight it for you to be able to see. This whole price action is your most recent leg. Okay, of course here what we see is a break of structure which happened over here. You might say that the break of structure has happened here, Chris, and here. You would be absolutely correct, because this is a proper low. It is lower than the low to the right and then the one to the left. This is also a proper low for the very same reason. But of course, if we take the structure, the whole leg, this is the break of structure that we are looking at. Now, you might say that, Chris, we were in an uptrend and now this whole continuation might be just a grab of liquidity for price to continue higher. It might be many things, guys. I don't care about that. I'm showing you a very specific strategy which has a statistical advantage, and of course, again, I'm using this strategy on Nasdaq. If you go ahead and you try to apply this strategy on Forex and not, let's say, on indices, you will have way bigger trouble. Of course, it will work, but it will work way less. What are we doing? We are identifying now as an extra rule, still on the 15-minute time frame. As you can see, we are identifying all of our fair value gaps. In this occasion, since we have broken below, those are called bearish fair value gaps. Now, there is a fair value gap here, as you can see, there is a fair value gap here, as you can see, and you will tell me, Chris, there are more fair value gaps, such as this one right here, and another 15-minute time frame fair value gap is this one over here. Why didn't you highlight those ones? Good question, just because we haven't reached there and we don't care about those yet, okay? Or we might not care about them at all if we don't see what we want to see. Let's proceed. We start with the very first fair value gap, and if I move one slide backwards, you will see that we are referring to this 15-minute time frame fair value gap down there. This right here is number 1. I proceed. Okay, over here I'm zoomed in, and what we will do, we will not just wait for price to come and tap on the FVG and scale down to a lower time frame. This time I'm showing you something way more significant, which holds way more value, okay, and way more significance, and you will be winning way more times. And of course, guys, if you want to join the spectacular services that I'm offering, go ahead and check out the links down in the description, or you can go ahead and find the links in the website, where I will have the full presentation in written form as well. I will tell you one thing, that we have statistics that are giving 80 to 90 something percent, 92%, with 1.5 to 1 reward to risk, which is something you will never ever find anywhere else. This is a guarantee. I would bet that you will not find those statistics anywhere else. And the best part, I have every single thing recorded. So my statistics, the way that you see them on your screen right now, everything is being recorded. There is a video for every single trade. Let's move forward. Now, instead of waiting for price, and here you see, to just get in the area and give the reaction, because here if you would scale down on a lower time frame, such as the 1 minute time frame, you would be finding some change of character you would have lost. We will be expecting a violation, and I say violation, of the FVG, because this is still a rejection with a wick of a candlestick, of a 15-minute candlestick. We will wait, in other words, for a break above the FVG, the 15-minute FVG, and a rejection of it. And those things happen at the very same time, guys. What do I mean by that? Let's move forward. We scale down. This is now the very same price action that you see right here on this 15-minute time frame candlestick. We scale down to the 1 minute time frame with this light, okay? And as I say, pay very close attention. This series of 1 minute time frame candlesticks was just the wick, are just the wick that was formed on the 15-minute time frame. This series was just the wick that you saw over here on the 15-minute time frame. So price came up, and now it is retracing. I move forward, and now we will go ahead once again, as we did in the previous video, which if you haven't watched, this is also a very powerful strategy that you can see. You can click on the top right of your screen right now and check out the previous video where we were showing the 5-minute fair value gap with a 1 minute entry. The entry was exactly the same thing. We are going ahead and we are identifying a 1 minute time frame low, the first low that we are gonna be seeing. Okay, the first low, let's go one slide backwards, that we see right here is this low right here. Why? Because this low is lower than the low to its left and than the low of the candlestick to its right. And again, we are on the 1 minute time frame now. What we will be expecting is a break below this low with a body of a 1 minute candlestick. So what we are doing, we are placing a horizontal line on the low of the candlestick and we extend it all the way to the right. What are we gonna be doing now? The first candlestick. When I say the first, I don't mean the first after the pattern of 3 candlesticks. I don't mean after this pattern, the first one, this one, I mean the first one which breaks with a body, which closes with a body below the low that we have identified, this is our entry. So as you can see, this is the first candlestick that broke below our first low with a body. This is our entry, and the stop loss goes above the first high, and I will explain why I'm saying the first high. In this occasion, this is the first high and the ultimate high at the very same time. You will see in the second example what I mean by that. What about take profit now? Again guys, you can go ahead and target areas of the 1 minute time frame. This is exactly how it would look. You see, this is the candlestick that we saw that broke below structure. This right here was our low. We enter, stop loss above the area. You are targeting areas of liquidity of the 1 minute time frame. This would have given you a 4.6 to 1 in this example right here, or you can go ahead and target liquidity from a higher time frame, such as from the 15-minute time frame. And this right here, guys, if you would have targeted this liquidity, it went even further, of course. It would have given you an 8 to 1 almost, or even more, of course. This trade ran for way more. Now, let's move on to the second example. And right off the bat, before we begin with the second example, you see what is the difference between this strategy and other strategies that other YouTubers are showing you every single time. And I have a bunch of high quality strategies in my academy. And of course, in the one-on-one, I can teach you my spectacular strategy, the one that I'm using. And of course, you can also join the trading signals. You will never find above 80%, which reaches 90 to 95% winning percentage with 1.5 to 1 reward to risk. Anywhere else, I guarantee that to you. If you have a strategy like that, thumbs up, guys. So here, right off the bat, you see that this is what we would be trading in other videos. Now we are waiting for a violation of the fair value gap. And this is the first 15-minute fair value gap that we identify. But let's not rush, let's go ahead and start from scratch. And as we said, the first rule, the very first rule, always is that we want to see a break of a structure. And the break of structure towards the upside happens over here. So if I consider my leg, my most recent leg, let's say, you will tell me, Chris, your most recent leg was this leg right here. Correct. You would be having a trade, not with this strategy though, because we didn't penetrate the high. But if you take this one as your leg, then you can trade this one as well. Okay. This is very clear. Break right here, way more clear, okay, compared to this break over here. And we can go ahead and identify our fair value gaps. And of course, you can see one fair value gap being this one right here, and another one, this one down here. So, again, here, this would be your wrong price action. Why? Not because it is wrong per se, just because in this occasion, we will identify as the correct price action, this one that penetrates the fair value gap of the 15-minute time frame. And the reason for that, there is a reason for that, is that traders are being manipulated here, trades were manipulated here and at the beginning of this candlestick, and now that it broke below the FVG, many traders are looking to short. Nonetheless, this is just a manipulation of the FVG for price to retrace on a lower time frame and go and move towards the upside again. So we highlight both our fair value gaps. This is one fair value gap of the 15-minute time frame. This is another one right here. Instantly see, as I said, that here we break below the area and we retrace into the fair value gap. Okay, you can see it exactly right here. Now, if I scale down to the 1 minute time frame, you will see that this wick that you saw previously, this small part of the wick that broke below the 15-minute time frame. Now on the 1-minute time frame, this is this wick that you see in the retracement. Now, a break of a high is happening exactly right here. Why, you might ask, Chris, so high? Because these guys, this right here is the last high before the last down move that broke structure. And this is the last down move over here. You can see it with the arrow, this thing. Now, what other high can you see? The most recent high. This is your most recent high over here. So now, do not get confused. You will be expecting this one to be broken and not a new high that might be created. So not, let's say, price does that, then goes here, goes down. You will not be saying, as an example, this high now needs to be broken. Just the most recent high from the price action which broke the structure. Okay, so you extend this one to the right over here. Now this is the last down move. If you were to place, you remember that I told you about the stop loss that I talked about previously. When we break with a body, this would be our entry. But the stop loss, I said in the previous one, would go above in the previous example, because we were selling. It went above the most recent high. In the previous example, this happened to be also the ultimate high. What do we mean by that? Here that we would like to buy from here, the stop loss wouldn't go to the ultimate low, which is this one, but the stop loss would go below the nearest low, as I showed in the previous video with the 5-minute FVG and the 1-minute entry, exactly the same stop loss. Let's move a little bit forward. Now things are very clear. This was our high. We extend the horizontal line from this high. This is the first candlestick that broke above it. Here we are placing our entry, and this is our nearest low, because this low is lower than the low to its right and lower than the low to its left. So our trade would look like that, our entry, and our stop loss would look like that. And of course, let's check out the take profit. In this occasion, we would be targeting this area of liquidity. This right here is not really worth it. It is more than 1-to-1, but just a little bit. And always remember to use proper risk management. Okay, I see many people are gambling their way through challenges or whatever. Do not do that. Okay, especially when you have funded accounts or personal accounts, never do that. Always use the minimum risk. I'm not telling you what to do because I'm not a financial advisor, but I'm using very proper risk management, but with the statistics that I'm giving you, which are those statistics that you see exactly right here. And yes, we are doing this thing live right here, and I'm not going to explain what this thing means unless you, of course, choose to join any of my exceptional services, which are by far the best services in the market. For those people who were thinking we are not doing Nasdaq, this is all Nasdaq, by the way, all Nasdaq every single day. I'm only trading Nasdaq now and nothing else. We have found actually the Holy Grail. This is the Holy Grail, and we are not changing this strategy with anything in the world. No way I'm changing this strategy for anything. It is spectacular. It is winning so much. You are taking your profits. You are living happy almost every single day. So go ahead now, subscribe to my exceptional services, like this video, subscribe to this channel, share it with all of your trading friends, your mothers, grandmothers, fathers, grandfathers, and whoever else you have, godmothers maybe, okay, or even godfathers, cousins, did I mention cousins, or whoever else you might be thinking of. And of course, go ahead then in my website. I will have the PDF that you can go ahead and download. I will be leaving the first link down in the description where you can go ahead and download the PDF and also see the full explanation of this strategy in written form. Once you download the PDF, when you click on this thing right here, you will be able to join the services. It will take you to my services, or you can click on the link down in the description of this YouTube video, or you can find my services through the website. This is gonna do it for today, traders, and thank you all for watching. Until next time.